Microsoft closed up 15.51% today. Since 1990, that has happened exactly 3 times. The other two were 2000 and 2008. And in the same session, Meta fell almost 8%. Two of the biggest software companies in the world reporting hours apart, going opposite directions. The scan's #1 ETF and stock are still ahead. And neither one is a tech name. QQQ closed up 3.30%. Yesterday, it finished on its low. So this was a full reversal. Technology gained 5.50%, its best single session of 2026. But look under it. Apple, Alphabet, and Meta all closed lower on the same day. This was not the whole market lifting. It was one company carrying an index. Here's the part that matters. Long bonds did nothing. TLT finished flat, down 0.06%. The 30-year closed at 5.214%, essentially unchanged from yesterday. The 10-year eased slightly to 4.677%. So this rally was not a rate relief rally. Rates gave it no help at all. The real move was in the dollar, which briefly traded under 100 before closing at 100.12. Energy lagged badly on a strong tape. XLE added just 0.53%, and it's actually down 0.71% over the last 5 sessions. Crude itself fell. USO dropped 1.42%. But the split inside the sector is the interesting part. Crude went down while refiners went up, and XOP gained 1.64%. When crude falls and refiners climb, that's refining margins widening. Hold on to that because it shows up again in the scan. With the dollar sliding, metals caught a broad bid. Silver led the precious complex, up 3.34% to 53.50, and gold gained 1.64% to 377.16. But the standout was copper. The miners rose 4.41%, tracking the same industrial demand story that's driving the technology tape, rather than the safe haven one. The softer dollar and the global tech rebound lifted overseas markets more than domestic ones. Taiwan led at 5.13%. Japan gained 4.41%, emerging markets rose 4.13%, and developed markets added 2.78%. Every one of those beat the S&P today. When the semiconductor supply chain outside the United States outperforms the domestic index, that's usually a currency story as much as a chip story. Crypto joined in, but barely. Bitcoin and Ether both lagged well behind the NASDAQ 100, which gained more than 3%. That gap is the readout worth keeping. The risk appetite that showed up in equities today only partly carried across to digital assets. That energy split, crude down, refiners up, is exactly the kind of structural divergence the best scan is built to surface. On a day when the headlines were entirely about 2 software earnings reports, neither of the scan's top 2 names is a software company. Let's look at what actually ranked. At the sector level, the rotation is clear. Financials led the ranked list, up 0.56%. But healthcare fell 1.64%, and real estate fell 1.44%. On a day, the S&P rose 1.68%. That's money moving out of defensives and into technology, not new money arriving everywhere at once. It's the same narrow leadership signal we saw under the index. The #1 ETF is CRAK, the Van Eck Oil Refiners Fund, up 2.89% to 55.82. This is the refining trade from Scene 4. CRAK holds the world's major refining names, and refiners trade on crack spreads and fuel demand, not on the price of crude itself. That distinction is the whole point today. Crude itself fell, and this basket still climbed. It's at watch in the platform. Educational context only. Confirm the signal yourself. The #1 stock is PANW, Palo Alto Networks, up 3.67% to 325.68. On a session where software leadership split violently, one giant soaring on earnings while another sank, the ranking engine surfaced a cybersecurity name whose strength showed up entirely outside those headlines. It's at watch in the platform. That's what the scan is built to catch. Strength holding when the tape is anything but clean. So, Microsoft posted its biggest one-day percentage gain since 2008. Meta fell almost 8% the same session. Technology had its best day of the year, while long bonds sat flat and healthcare fell. The scan answered with a refiner and a cybersecurity name, neither of them part of the story everyone was watching. The thing to watch tomorrow is whether the rest of the market joins this move, or whether it stays one company deep. Verify both picks live in SignalFinder Pro. And remember, this is educational, not financial advice. Do your own homework.